Greetings and salutations. We're doing it live. My name is David Duford. It's a pleasure to have you on today to our annual annuity sales and marketing extravaganza. It's a pleasure to have you guys on here. Again, my name is David Duford. We do this once a year where we do a deep dive into the annuity sales and marketing space, where we go into detail along with a special annuity expert guest that I'll introduce here in just a second. The purpose of this training is very simple, ladies and gentlemen. It is to help you understand exactly how the annuity business works and how the money works and how all of the business around annuity sales can be beneficial for you. So if you are thinking about selling annuities, you've heard about how much money can be made in annuities, then this training is for you. We're going to start by teaching the very basics and then going into more of the marketing and the sales side, so that by the end of this, probably about 2.5, 3 hour training, you're going to have the confidence and you're going to have the perspective on what annuity sales is all about and how you can do it successfully. So with that said, I'm going to go ahead and introduce our special guest who's going to be doing most of the talking, most of the training today. Her name is Jessica Fox. A little bit about Jess. Jess and I have been working together, I think, right before or after COVID started. Jess got into the insurance business at first with final expense, made a pivot somewhere in a year or two later into annuities, and has just been crushing it and has done very well in the last several years. And it's a pleasure to have you on, Jess. How you doing today?
Good morning. Thank you so much. What an introduction. Well, it's
Yeah.
truly my honor and a privilege to be here with you, David. And as funny as this may sound to you, it is a dream come true. When
Okay.
I initially began working with you, I just believed strongly that there was going to be a great partnership. I didn't know what that looked like. I thought it was final expense. And of course, we entered the world of annuities, and here we are today.
There you go. So walk us through your background. Just I want people to understand what you did before, really insurance, how you got into the business, and then how you got into annuity, so people can kind of understand where you come from, what your background is.
Sure. I worked for a Five Diamond resort hotel. I did that for about 15 plus years. And I worked in executive sales. I've worked in hospitality. So it was really important to me that I was client centric, customer focused. I also had a very strong propensity for sales. And the way that my sales process has always worked is it's about uncovering a need that people have. And when they have a need and they recognize there's a problem to solve, and then they're passionate about solving that problem, the sale is natural. It's just the natural order of things. So I've always been referred to as a soft sell. I don't have a very strong bulldozing personality when it comes to selling, but I have had 100% close rates. And I challenge myself in periods of time to see just how many people I can effectively help. And ultimately, it's closing in sales, but I'm not driven by that, but I enjoy seeing that as a result of my process. If that makes sense.
So how did you get into insurance? You're doing great in the resort business. What attracted you to insurance?
Mm-hmm. Well, I got to a point where I felt like I kind of maxed out in my opportunities there. I still wanted to grow and develop. I don't believe that at any age, you should be aged out of work. And so here I am 50 today, and I feel like I just have this career that's blossoming, and I could do this for the next 15 years. And I'm real excited about that, or longer. There are people in the business for longer. I see myself for another 15. COVID hit, the hospitality business shut down. I was living in Las Vegas, Nevada, and for months we were out of work. And I thought, this is really the time for me to make a change. And I had owned my own businesses before, and I figured it was time to do that again. And my dad actually believed that I would do well with life insurance. And he said, listen, get your license. It doesn't matter if it's a side door, you'll be redirected once you're there to your area of specialty. And so I started in final expense, and then annuities began presenting themselves. And that's where my pivot took place.
Yeah, so let's talk about that. I'm curious. So you found annuities selling final expense, right? Describe that to
Absolutely.
the audience, like how you stumbled across this, because we're going to talk more about marketing and where you can find leads. That's a huge subject matter with annuity sales. But talk to us how you stumbled across it all altogether.
Well, I think we have to at some point address how I stumbled across you too. Should we start there? Or do you want me to go
Uh,
into annuities?
yeah, no, just jump right into annuities. That's fine.
Okay. So I have been following your training for final expense and ordering direct mail leads. And with those direct mail leads, I was door knocking. And in the process of sitting down at the kitchen table with people, I was coming against resistance. And if I was solely focused on a sales technique that said, this isn't a real prospect, it's time to leave, go to the next house, I'd have missed the opportunities. But I heard a sincerity in the people's voice, even though they were telling me, this, I don't need what you're offering. I didn't realize this was about final expense. I remember asking the questions, what do you need? How might I be able to help you? And so then I started to uncover what areas people had concerns about, which led me to uncover the annuity business inside of having a life insurance license. And then I would tell folks, I'm very happy to help you. I would love to be able to help you. I don't know how I'm going to be able to. I'm willing to learn. And as long as you're willing to go on the journey with me, I'll be as candid with you as I go. And my first annuity clients literally learned the annuity business with me.
So you had no like restrictions or felt this fear of like, well, I don't know anything, so I'm not even going to try. Like you jumped in it with them and you did all the finding of the resources to figure this stuff out as you went, basically, right?
I feel fear every day, but I've been called a bull whisperer where I go after the bull. I tell the bull what to do. I take him down, I give him directions. I lasso him to the ground. Fear is part of the human condition, I believe. But feeling the fear and doing it anyway. I think it's a book by Susan Jeffers I read many years ago. Don't quote me on that. Do a Google search. But psychologically, you've got to walk through fear. There's no way around it. There's only through it. And so uh, I pioneer new terrain every single day of my life. I'm always making new decisions. As an entrepreneur, it's crucial. I learn as I go, activity, 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 without taking risks, without being willing to go into your uncomfort zone. There's no way you're going to learn. There's no way you're going to grow. And that's where the success is.
Cool. So let's talk about the subject matter we're going to discuss today. So we're going to jump right into it. So let me just go ahead and recap this for everybody that's jumping in. By the way, if you're watching this live or recorded, please hit the thumbs up button right now. That tells the YouTube algorithm that this is important content, that people would be interested in it. And a lot of agents like the idea of annuities, but have no like grounding or understanding of how it works. And being we're here today, this is what we're going to talk about, like it, so YouTube knows to share it. So again, just to recap for everything that we're going to talk about. So to get started here, now that we've introduced Jess and what her background is and why I should listen to her, we're going to first start off with a discussion on how annuities work. So if you're here today, you've heard about annuities, you just know the basic, maybe don't know nothing. This is going to be perfect for you because we're going to go describe what an annuity is, why people buy them, the different types of annuities, and what the outlook of the market is for the next for the foreseeable future. Again, whenever you're looking at selling anything, you want to make sure that there is actually a market for it that won't go away because some government edict or because it's some sort of short-term, opportunity. After that, we're going to go into what I call the show me the money, where we're going to talk about like what type of income is possible. Jess and I will kind of have a conversation about that. I encourage Jess to share some stories about the sales that she's done and how much money she's earned, just to give you real life scenarios of what is possible if you put your time and effort in. And that's probably for a lot of us the most exciting part, because annuities can represent a real 4 to 5 figure per sale income opportunity if done at scale. Additionally, we're going to talk about annuity marketing. This is a big subject because you can sell anything, but if you don't have leads, you're nothing, right? You're just struggling. So we're going to talk about the different ways to generate leads. Jess is going to share her experience. I'm going to share mine. And the point of this is to empower you with the strategies necessary to implement a marketing strategy to find prospects that actually want what you're selling. And then we'll conclude with a walkthrough of how Jess asks the questions to find annuity opportunities, as well as how she presents them. Again, you may be aware of what annuities are, but it's like, how do you get in a conversation? We're going to show and tell you how that's done. All throughout this, I want to say a couple other things too, guys. This is a collaborative training. This isn't a lecture series. Jess and I were talking like, I think the best way that we can provide the most value to you, especially to the live crew, is if you have questions and they're relevant to the conversation where we're at, ask them, okay? We'll make sure with each section to stop or pause so that you can ask us questions. But throughout, throw them in the chat. Yours truly is going to be monitoring that. And then I will stop Jess at intervals and say, hey, question from so-and-so, blah, 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 blah. And then she'll be happy to answer it because we want you to take away from this whatever, value you're looking for. We have an idea of what I think you'll enjoy and get value out of. But if there's something that you want us to dig deeper into, don't hold back. Let us know. That's why we're here. And then also we're going to have a special guest here in about 11:30, so about 75 minutes. Going to talk briefly about an annuity lead system. So make sure you hang around for that in an upcoming training that they are doing. Okay. So again, checking the chat here. Looks like everybody can hear, so that's good to know. Again, thank you for hitting the like button. We like that, incidentally. Okay, cool. So let's start from the top. We don't want to leave anybody in the dust. It's important to understand what an annuity is, not just how much money you can make from it, and understand behind the basics of an annuity, what the opportunity is over the long run. So what I'm going to ask Jess to do is take us from the top. If you kind of describe for the neophyte, a new person or aspiring agent, what is an annuity and what's the benefits of it?
Sure. So essentially what we're looking to do is help folks with their retirement. And most people don't have a solid retirement plan. And if they are working with a financial advisor, oftentimes that advisor has helped them to get to the point where we meet them. But my favorite expression is the vehicle that gets people to retirement is not the best vehicle to get people through retirement. So the financial advisor and us, we're not in competition with one another. We serve two different purposes, but the value that we provide as a financial professional with a life insurance license is that what we can do is offer them security in their retirement. And with fixed indexed annuities, which is what I specialize in, we help retirees, pre-retirees, people who are just looking to start planning for retirement at any age, a vehicle or an account or a plan or a program. These are some words you can add as word tracks or verbiage for your sales process. We offer them an option that is secure. So a fixed index annuity is an account at an insurance company that has no risk of market loss. So let's say somebody has money in the stock market and they want to stop the loss that they're incurring due to market volatility. They can actually take, let's say, a 401k or an IRA, traditional or Roth, and they can roll it over into a fixed index annuity. And we get to facilitate that process. And the value of that is now a person can get the upside of the stock market gains without risk of losing any money in the stock market because their money is no longer in the market. It's in an account at an insurance company. So it's protected, but they're getting participation in the market gains. So there's growth, income annuity. There are growth, fixed index annuities have two designs, one for growth and one for income.
So, okay, are all annuities fixed index annuities?
No, there are different types of annuities.
Could you go into that, explaining the difference so people understand?
There are financial advisors who have securities license, which allows them to offer variable annuities. Variable annuities often have fees to your clients and also are at risk of market loss. So, for example, I had someone say to me, I thought I was getting a fixed index annuity. I was very clear with my financial advisor what I wanted, but here's what ended up happening. And they showed me they were paying over 5%, greater than 5% in fees. So in a variable product, which could lose money. So they had to take those things into consideration before they were ever going to make any money inside of their annuity. They absolutely were unhappy, asked me if I could get them out of it. And I can teach how you can do that. But yes, the answer is yes.
Yeah. So
I
we
was able
got
to train them.
fixed index annuities. We have variable annuities. What other annuities are there?
Great. There are MIGAs, multi-year guaranteed annuities. MIGAs allow people, it's like a CD, so it allows someone to get a guaranteed interest rate of return for a set period of time. Typically, these are for longer periods than a CD. So if somebody gets a CD at a bank, maybe it's going to be for a short period. We offer 3-year MIGAs. Well, a life insurance agent can offer 3-year MIGA, 5-year MIGA, a longer term product, and the rate is typically higher.
Right. So why? So go into this. So why would somebody want a fixed index annuity? Which again, to summarize, you participate in the stock market gains to an extent while protecting the downside, so there's no loss. Why would
Absolutely.
somebody want to do that versus maybe a regular annuity where the interest rate is declared and it's fixed? Can you kind of describe the psychology of both? And then where do most people this day and age put their money into annuities? Is it MIGAs? Is it variables? Is it fixed index annuities?
Great questions. So part of that has to do, the most relevant piece right now is the last thing that you said. Part of it has to do with someone's associations. So if somebody has a financial advisor and they know somebody that's offering them a variable annuity, they may get a variable annuity just because that's all they know.
Hmm.
And so one of the things that's really important to me is to make sure that I help other agents and brokers understand the necessity that we have to go out and provide our services so that people are aware of what their options are in retirement. Now, information alone isn't going to, quote, make a sale, but
Right.
helping inform the public is really a massive key to how people get annuities because they don't know about them. And the more the people become aware of them, the more, I guess, popular they become. It's a multi-billion-dollar industry. And the question that I often was getting was, why don't more people do these? Well, a lot of people do, but the people who don't know about them don't have the opportunity to get them. Uh, but you were asking me, why would somebody do a MIGA versus a fixed index annuity? It's a
Correct.
brilliant question. I actually was writing a lot of MIGA business, and over a period of time, because we were in such a high rate environment, so people were very interested in capturing the top of the market CD rates. CD rates just kept climbing, and as CD rates climbed, MIGA rates climbed, and as a result, I was able to capture the business, so to speak, capitalize on on being in a high rate environment for the MIGA client. Now, some people are very conservative and they want that guaranteed rate, and I sure don't blame them. But knowing what I know, fixed index annuities historically have returned 2 to 4% more than MIGAs, and therefore I have at my age 50, transition my accounts from Fidelity, Schwab, Vanguard over into fixed index annuities because I want the greatest growth potential. And the MIGAs were only going to lock me in at a capped rate. And I know that in a good, healthy market, fixed index annuity for over a 10-year period is going to return higher than a MIGA that's locked in.
So in short, it really has to deal with the risk tolerance of the client, right? Some want to take the risk of low returns with a fixed index annuity, but still no losses. We'll talk about that in a minute. Whereas some people would rather know exactly what they're getting, right? Maybe they'll take 4.5% for 5 years versus the potential for 6, 7, or 8%. So it's just the point is, and please clarify, can an agent sell? An agent can sell both of these, right? It's not like you're fixed with one or the other. You can kind of just say, what do you want? Which one makes more sense to your risk tolerance, right?
Yes. And one of the things that I talk about, and let me just say hello and thank you to everyone who's listening to this live today and also who's going to be listening to this video in the future. I feel really honored and humbled to provide, I'd like to say entertainment value to you all because that gets me off the hook here, but I will say educational value. Everything that I say today, I am aiming to be accurate as of today. And information changes, laws change, products change over time, depending on when you hear this. But as of today, the information that I am seeking to give you is as concise and on point as possible to help you get an understanding of annuities, if you're interested in learning about them for your own personal benefit, or if you're interested to help others learn about them and to sell them. So just thank you so much for being here. David, can you help circle me back? What was your last question?
Sure. The main question that I'm driving at here, I think, along these lines, is kind of going back to is helping the audience wrap their heads around why annuities are a viable opportunity. And I think if I ask you this question, this will kind of help us solidify the point. So most people, how do they operate? They have a 401k. If they're self-employed like us, a SEP IRA, right? Some sort of account to invest in the stock market. Why would somebody want to move, if you can kind of summarize it like as concisely and briefly as possible, what is the big benefit to moving out of the stock market and one of these traditional vehicles into some kind of annuity?
The two greatest problems that we're looking to solve for generally surround the concerns that people have of number one, running out of money, and number two, losing money in the stock market. Those are the problems that people express concern about that we're looking to solve.
Yeah. And there's a book titled The Power of Zero. And this may be kind of odd to some people in the sense of why would somebody be happy about not making any gains? Can you kind of describe that? Like what happens in the situation where, why would somebody be happy with an annuity and they don't make any money on it? Because that is a possibility.
Yes. And I want to go back to the high rate environment too, because I have a couple stories that have been floating around in my mind. The power of zero. Zero is your hero has been a slogan that people use. And by the way, for everybody that's here in attendance, let me just start by saying you must have a pen and paper, because although every single word that I say may not be something you want to write down, there will be nuggets that I'm going to drop for each person that's on here today. It may come in the next 5 minutes. It may come in the next 35 minutes, but one nugget can change your life. And I'll tell you stories about how that's happened for me in the course of my career and in terms of my bottom line. Okay, David, sorry. When my brain gets going, I feel like I have to share. Can you go back and ask me your last question?
I think I asked why would somebody take money, or the power is zero. The power is zero.
The power is zero, yeah. Okay, so there are multiple ways to address this. Yeah, so let me explain how fixed index annuity works. I consider it like an up-only elevator, okay? So if somebody has a fixed index annuity and it's going to be a value, I'm gonna go through the engineering of the fixed index annuity. So let's say we have a 10-year product and somebody signs a contract, they have funded the annuity, and we can go into how somebody can fund an annuity and get an annuity. There are different index strategies or asset allocations within the annuity. And it's really up to the agent to communicate with the client what their risk tolerance is and how they'd like to assign their funds, or I think the word is apportion their funds. I recommend to agents an annual review every year for their clients, because it gives people an opportunity to reconnect and then to take a look at their annual statements. Now, why is it an annual? It's an annual statement because the strategies are evaluated over a period of 1 year or 2 years. So they're called, a lot of times we have a 1 year point to point or a 2 year point to point. So the date a contract is issued in an annuity, and then the year from then, that is the time frame for evaluation in a 1 year point to point. A 2 year point to point is the date the contract issues, and then the 2 year anniversary mark. And what we're looking for is, what does that index do over that period of time? So now the client gets to choose 1 year or 2 year, and then also we get to choose what indexes we're following. And there are different strategies, even amongst these, how the indexes are chosen, whether we have caps, participation rates, spreads, a fixed account. That's all a lot more details. But we're trying to get to why is zero the hero, so I don't want to get too tangential. So fixed index annuity, let's say we're tracking with the S&P 500. And so at the end of the year, We're going to look and see how did the S&P 500 do, and if the overall sentiment was up, interest is going to be credited to the account. And we can get more into the nuts and bolts of that, but let's just focus on at the end of that year, gains are locked in. Now we're going to go out another year, year two. And if the overall sentiment of the S&P 500 again is up, we're going to have further interest credited to the account. So every year we're growing, locking in gains in a positive rate environment in accordance with the index options that we selected. And then let's just say we have a negative year. So let's say we started with 100,000, we're now up to 115,000, and the market takes a downturn. Good news. This up only elevator opens the door, you get off. You're literally just staying on the floor where you're at 115, and other people are losing money in the stock market, but you are staying right at the top where you've locked in your last gains at 115. Now, whereas people in the stock market have to recover their losses, you do not have any losses to make up for. So during that recovery time, you're already starting to make money again. So the market recovers and your 115 is now bumping up. Maybe you get to 120, locking in gains year after year. So when that market takes a downturn is when some financial professionals get their first batch of brownies from their clients because they realize, oh my goodness, I never lost money this year.
So let's build on that. So the bottom line here is that when you know what hits the fan in a stock market product, right? A 401k, you could lose everything or a lot.
Yeah.
But in a annuity, fixed indexed or otherwise, but fixed indexed because it's tied to stock market, the way it's designed is you don't lose anything. Now, why is that important? Can you tell me, with the people we sell these annuities to, why removing loss risk is so important?
Mm-hmm. Absolutely. Again, have your pens and papers ready here. We talk about go-go years, slow-go years, and no-go years. So at different times in people's lives, it's basically different seasons. And what we're often dealing with is retirement planning for folks who may be 10 years out of retirement or sooner, or maybe already in the retirement window. If this is the case, what happens is wealth conservation or wealth preservation becomes a very critical component of their financial planning. So sequence of return risks is not a conversation that a lot of financial professionals or advisors discuss, but it is so critical. Basically, there are different charts. You can Google search it, you'll be able to find it. But the idea is none of us has a crystal ball. Nobody can time the market. I don't care how many degrees or certifications they have or how long they've been in the business. Nobody knows exactly when the market's going to take a downturn. What we have to go by is historical performance and cyclical market downturns. So a financial advisor may tell a client, these are just paper losses. Don't worry. It's not locked in until you sell it. Well, that's not true when you're in that window of time that's the retirement red zone, because now you're 10 years out or 5 years out, or you're right at the door of retirement. And if you have to take your money out of the market during a market downturn, you've just lost a significant portion of your life savings. And even if you don't have to take it right then, a person may be forced to stay in the workplace longer in order to effectively recover their losses, which is going to take probably a good 7 years. And we just can't afford it. People can't.
Yeah,
The American.
yeah. So think about this, guys. Like, you've worked your entire life. This is our prospect we're talking about. They've worked their entire life. They've gotten to 65. They're ready to retire. They're ready to see their grandkids, do other things besides work. And they've saved up all of this money. Maybe it's $500,000. And then if you're old as much as I am, I turned 40 Saturday. Good God, terrible.
Happy birthday.
Yeah. But if you live long enough as I have, then you've lived through the mortgage crisis back in 2007 and 8, where people lost 50% of their valuation inside of 6 months, probably more, somewhere in there. But the point is, imagine if you were 65 at that point and you had to go through this stress of knowing everything I've saved for is gone and I'm out of control. Whereas if I had that money in something that the loss was zero, and I could be reasonably assured that when I needed to draw that money, it would be there, how do you think people would have responded? How do you think people will respond? Because that's going to happen again. And taking out that risk element, and that's kind of the driving point I wanted to go here for everybody here is that this is so important. You may not think this way if you're younger, but when you're in your 50s and 60s and thinking about retirement, at some point you're going to stop making money and you got to live off of what you made, that savings, right? And so this is where the annuity opportunity becomes profound because the annuities eliminate the risk that basically everybody out there has shouldered over the years as they've invested in their 401k, et cetera. And so this is the opportunity as these annuities for this clientele, typically 50, 60 and older, allows them to get peace of mind, certainty with zero risk, with some participation as well in good years, and live out the retirement without being in fear. I think that's so important. I just wanted to drive that home with everybody, Jess. I know we kind of mentioned that a couple of times, but this is like why this is such a big deal. But so let's get into building on this, the opportunity. So we know
Hey,
that
David,
yeah,
I like to nerd out and I like to go into details. If you would allow me to, I'd really like to speak a little bit about participation rates and the rate environment that we've been in, just for anybody who might want a little bit of a deeper look. What do you think?
yeah, go for it.
Okay. Don't be overwhelmed. If this isn't for you, hang out with us for a few minutes and we'll get through this and then we'll move on to something else more conceptual. But for those of you who might be more seasoned agents or numerically inclined, or you really want to understand the return possibilities with fixed index annuities, let me tell you a few things. So when I work with insurance companies, they offer me a software tool called an illustration. Illustrations allow me the opportunity to see back tested numbers. So I can see what indexes can do numerically. And then I can run those. And any financial professional and financial advisor, someone at a brokerage, we all have access to illustrations. I am completely candid with my clients, and I'm going to be completely candid with you as well. I believe that there are some illustrations that have been hyperinflated to make returns look astronomical so that people would buy into annuities for the possibilities. That being said, let me be clear. Your grandmother's annuity is not the annuity that's available today. We used to live in a rotary phone world. We are living in a cell phone world. And I'm going to tell you about a couple of clients of mine that had some pretty fantastic returns here momentarily. David, remind me so I don't forget. So what happens with these annuities is there used to be strategies called spreads. And I actually had an agent ask me to talk about spreads. And I said, I'm not even going to spend time on spreads because it's not relevant right now. And then we also have strategies of caps, and we have something called participation rates. Now, let me be clear that we are living in a time right now that the concepts that I'm presenting to you are extremely tangible and relevant. Just like technology, annuities have evolved and they will continue to evolve. So we can't take this information and think that 10, 20 years from now, this information is going to be the same. But today, what is so compelling are participation rates. Participation rates remove the ceiling that a cap would impose. So for someone who in the past might have gotten a fixed indexed annuity and they wanted to put their asset allocation, let's say they have $100,000 and they want it to track with the S&P 500, there might have been a cap of 5%. And so that's all that they would get in regards to how much the S&P returned, up to 5% of what the S&P returned. Well, caps have been very high. They've gone up to 7%. They went up to 10%. We had huge cap raises in the high rate environment. However, in addition to that, we had a whole nother strategy emerge called participation rates. And I really want you to understand what that has done, that has changed how people make money in safe products like fixed index annuities. Participation rates allow a person to get a percentage of the return of the index. And the participation rates have been for 1 year point to point strategies, which is where we track from the contract issue date to the anniversary date out for 1 year, over 100%. And for someone willing to take the risk of waiting for 2 years in a 2 year point to point strategy, participation rates of over 200%. It is a multiplier of the interest rate that the stock market returns. So that means that somebody in a fixed index annuity could receive twice the amount of interest credited to their account than what is actually happening in the stock market. Now, no insurance company is going to give a 200% participation rate on the S&P 500. They'll give a percentage, but it's less than the 100 or 200. But there are other indexes that have been created that are allowing for the 100% and 200%. And so I've seen returns of 11% and 13% just recently in annual reviews with clients who had fixed index annuities and opted for participation rate strategies.
Cool. So in short, there's opportunities beyond that, maybe the perception that some people have of taking a inferior return to what the stock market is. So an even more compelling reason to consider it. So let's move on to let's talk about the opportunity for the next 20 years.
Thank you for humoring me and allowing me to go deep on that.
Yeah. So let's talk about, we know who we're talking about here that we sell annuities to, typically people 50s, 60s, preparing and beyond, way beyond 60s, that are preparing or already in retirement. How does the outlook look for annuity sales? Say it's 2024, we're filming this, for the next 20 years. What's your opinions, Jess?
I think it is phenomenal. I think the opportunities for fixed index annuities to become a household conversation is just, it's going to be widespread like wildfire. The amount of business that we've already been seeing within just one company in a quarter generating billions of dollars, and knowing that there are thousands of annuities out there, just leads me to believe that over time the information is going to become more mainstream and widespread, and this is going to be something that everybody's going to want and have and own.
The other thing I'll add here too for the audience is that what we have happening demographically right now is the baby boomers are in a mass retirement phase. You probably heard, looked at Medicare or other senior-based products, that 10 to 11,000 boomers are retiring every day for the next 10 years, right? And the reason this is important is because retirement fuels a perception change, right? And when we speak of annuities, we're talking to people who are busily accumulating assets, who are now at the phase where the distribution of those assets in a safe way is of utmost concern. So the point of me bringing this up, what is the point? Why should you care? Because with so many people retiring and the percentage of the population moving into to retirement years, and the concerns people have lived through, the ups and downs of the stock market, is going to lead, I believe, more and more people to buy annuities to protect what they have built slowly and steadily over decades. And so this is why this market is so ripe for the taking. You coming in now in 2024 or beyond and being here for the next 5 or 10 years, you will not exhaust your opportunities. There's going to be even more, is what I'm trying to say. And so if you're looking at this as not just the next get rich scheme to try, but as a career and as an actual business to build, this offers so much opportunity you otherwise may miss out on. You know, I think anything, as a side note, anything in the senior market or the baby boomer market is hot for the next 15 to 20 years, no doubt, because all these people are the ones with the money anyway. So why not go after that market to some extent? And annuities definitely fills that. Anything you want to add to that as far as why annuities are a great opportunity, Jess?
Yeah. 3 points that came to my mind. I'm going to ask you to remind me. Here we go. Decumulation, I'm going to touch back on in 1 second. I'm also going to talk about private pensions, but let me start with, and I love what you just expounded upon is that the responsibility of a person's retirement used to fall on a company. It used to be about companies providing pensions and a gold watch. If you were loyal, you worked for a company throughout your life, you would have a retirement secured. And what has happened is the responsibility has shifted to the individuals. And now companies are providing 401ks, 403bs, and we are left to try to figure out how to set up an IRA, to understand Roth, to figure out tax efficiency. How do we turn on Social Security? Everybody needs help. And the thing that I hear over and over is, number one, people feel like they need financial education. Number two, they appreciate my ability to take the complex and make it simple. So please understand, if you are out there and number one, you don't feel financially savvy, welcome to the American population. We're in a place and a position where financial professionals who have honesty and integrity and values are really needed. And our messaging needs to be clear, and we need to be relatable. We need to be willing to open our mouth in spite of the fear that we feel or the inadequacy or lack of confidence when we first get started. We have to open our mouths and start talking about what we know, because we know more than most people out there. And the more that we do, the more that we gain confidence in our competence. And once you start hearing your clients tell you, wow, I didn't know that. I'm so glad that we're having this conversation. Then I believe that as an agent and a broker, the relationship begins, from a point of we're having a conversation, we're talking about really vulnerable information, people feeling on both sides, a little bit insecure about the shortage of knowledge about their money, maybe insecure about not having enough money, somebody that's feeling like, am I equipped to help somebody with their money? But understanding that there is like a marriage there, that needs to take place. Everybody needs somebody to counsel them through their retirement planning. And I've seen a lot of greed. I've seen a lot of bad ethics, lack of integrity. And one of the things that I value the most is having the opportunity to share with other agents and brokers who are interested to how to have an ethical practice.
Yeah, I just had this question or this idea concept. The big shift in the last couple of years has been artificial intelligence, AI. What do you think the impact will be on the sales of annuities? Is it going to be a competition source for us? We're going to have to, fight against Skynet and Terminator to get sales, or is the old-fashioned way of selling still going to be viable, do you think, for the next 15 to 20 years?
Conversation between people is not something that can be replaced with AI. I do believe AI is going to be a very helpful and powerful tool. But my understanding, which is limited at this time, is that we are the ones who are responsible for educating AI. And so there's a shortage of information out there, and there's inaccurate information being fed into AI. So we have to invest in the future generations to come by putting the right messaging out there for AI to serve a value.
I would say too, AI as it stands now can't get a license, right? And I think this is a big advantage of selling anything in the insurance business. I really feel that because there is a state-based regulatory body in every state to allow for an insurance producer to get credentialed or not, that we have some sort of bulwark against artificial intelligence invading and taking up market share. And I think we do have some power too to push back against that if that was ever something that was allowed. And plus, at the end of the day, this is sales. You've got to be a good listener. You've got to be a good analyzer. You got to get into details and emotions. And, AI is not quite there yet. And I don't know if it ever will be, but I think there's multiple layers of that. Obviously the development is still early on with AI, but truly, even if it develops well, I just think that the licensing side of this, will they ever license artificial intelligence? I don't know, but that's a huge protection for anything insurance. So whatever you're selling out there is a good thing. It's good for us. Okay, so a couple of questions from the chat. We're going to make a shift here in a minute, Jess, to talking about, I think, what are we going to talk about? Oh, the money behind annuities. So we'll get to that in just a second, but some chat questions here.
Accumulation. And I was wondering about the accumulation.
Oh, go ahead.
So you had started talking about it a little bit. You touched on it a little bit, and it came to my mind. So people being concerned about running out of money, and how I started with that pensions were something that were provided to people, and then the responsibility shifted to us, and people don't know what to do with a 401k. Well, what can be done is these retirement accounts can be, and we can discuss the timing of it, but can be moved over into an annuity and can be used to fund their own private pension. So people actually can create, through a fixed index annuity, an income stream for life that's guaranteed to never run out. And should they have a spouse that they want to pass that on to, when they pass away, their spouse can also continue to receive that money for the rest of their life.
Right. Okay. So questions from the chat here. Why would a person want a fixed index annuity instead of an index universal life plan?
Two totally different vehicles. So an index universal life has an engine that's designed with, just take the fixed index annuity engine and drop it in the IUL. And then there you have it.
Yeah.
But index universal life is a tax-free Roth alternative. Essentially, it's I am not an IUL expert, so fact check me here, but I'm going to give you my basic understanding. It's funded. It's limited as to how it can be funded. I believe it has to be funded with non-qualified money only. It's a life insurance policy. There are different strategies how a person can use it and at what age would be best serving. And if you talk to two different financial professionals, they're going to give you two different strategies. But here's one. Somebody age 35 comes to the table and says, I want to put money over the next 30 years monthly into an account that's going to grow, that I don't need access to until I retire, and then I want to take income from. So you could take an IUL. You could help them to get an IUL. They could, if they're 35, they could put $500 a month into that for the next 30 years. They don't touch it. And the fixed indexed annuity engine, the one that we were talking about, how it grows when the market goes up, is exactly how the IUL is going to grow, with index crediting. And then there's going to be compound interest taking place. Now, an IUL has fees. Okay. We don't have all the charges and fees in a fixed indexed annuity like an IUL. But at the time that somebody wants to take the money from the IUL, so let's say 30 years from now, then it's fully funded. And there's a word called max funding. You know, people want to overfund it so that they're able to take policy loans. They don't want to take withdrawals. My understanding is they want to take policy loans, which will then be deducted from the death benefit so that they never have to pay it back. So that's the general concept about IUL.
Yeah, I'll summarize it briefly. IULs are for accumulation to retire with. Annuities are for preservation of what you accumulated. I think in a nutshell, that's fairly accurate. Of course, there's some gray area there. But IULs are what we use most likely on a younger person that's thinking about retiring eventually. Whereas annuity, typically, you're moving a large sum of money they've already accumulated to retire with. Does that make sense? So it's like what Jess originally said. It's kind of two different markets for the most part that mostly don't overlap.
That's a good assessment.
Continuing on here, do you need a securities license to sell fixed index annuities? I'll answer this. No, you don't. All you need is a life insurance license. Let's see here. I'm going to go through the questions here. There's quite a few, Jess. Hang on one second. It concerns me, and your comments on this, if you like, it concerns me, says Philip, that most IMOs push low-rated companies. What do you think about that?
Yeah, that's very concerning to me.
Why did they do that? Briefly, why would a company push a lower quality company?
I can't answer that.
Okay. I'll answer it. It's because there's probably more commission in it. And, there are wide differences in commission on different products. And this is just me, not just talking. There are carriers out there where the commission is double the level of that's poor rated versus one that's highly rated. So it's largely that. That's how I would basically imagine it. Okay. From Robin, she asks, quick case study. Let's say you have a 55-year-old. I'm sorry. Now let me having a boomer moment. Okay. What would you advise a 55-year-old man with no pension or retirement savings to do? What would you have them do with like 75 grand is what you're saying?
So I think that we want to talk about this when we go through a fact finder and discovery process, Dave, because there's a lot of questions that I would want to ask.
Okay,
So
let's leave this and let's use that as our fact finder. Okay, so Robin, you're going to get a whole fact finder based off of your client. So 55, 75K, we'll do that later. Okay, moving on here. Is the annuity accumulation funding the same as what they refer to as a reset?
I think this person might be talking about an income annuity, and they might
Okay.
be asking about if it's out of the surrender term and then they want to continue the roll up, they may do what's called a reset, I believe, where they can then continue to get the roll up rate because they haven't activated their income rider yet.
Okay. So can annuities be taken out of checks like a 401k? I mean, sure, I think it's possible. Go ahead.
So here's how this transfer process works. It's really important to understand that if you want to move funds from a 401k into an annuity, it's a non-taxable event so long as the agent or broker is responsible for transacting that with a 1035 exchange form, for example, or the accord form. The person does not want to take possession of the funds. The client does not want to take possession of the funds because at that point, it's no longer tax deferred and they will have to pay taxes on it as though it were withdrawn. So we keep it tax sheltered. We just do a 1035 exchange. The funds go directly between the 401k, which we call the seeding carrier, and the insurance company. So the two financial institutions are the ones whose hands the funds will transact between.
Tracy asked a question. Do you have to medically qualify for a fixed index annuity?
Oh.
Yeah, I think that's probably, and somebody else mentioned that too earlier. Malcolm did. IULs, you got to go through medical underwriting, right? So there's that element. Annuities, you don't. I imagine just basic, competency, like you're aware of where you are. It's probably the limit of that.
Can I do a little I guess it's a plug for a product, but not intentionally so. It's just to illuminate this point a little bit. It's just okay. So there is a product that's recently been reintroduced into the market that's a hybrid product between a long-term care and a fixed indexed annuity. That one will have underwriting, but that's actually considered a life insurance product. It just has built-in fixed indexed annuity growth. But fixed index annuities independently do not require underwriting.
Okay. Yes, Todd, we will. This is all recorded on YouTube. You can literally follow the same exact link. Todd, everybody else, if you want to watch this again, you're busy driving, doing something else, and then watch it as much as you like. Okay. And then Adolfo has an axe to grind. Advisors pick on insurance agents, quote unquote. People are sold annuities with nice caps and participation rates, but then after their first anniversary, they go way down and people regret buying them and are stuck with the surrender value. I imagine that's what the advisor is saying, right? What's your thoughts on his opinion?
So at the different insurance group, we take integrity as a core value. And so we work with carriers that have what's called renewal rate integrity. And I can tell you that there are companies who have tanked rates year 2 and year 3, but there are companies who have very, very high renewal rate integrity, if not perfect renewal rate integrity. And when we work with carriers, we have core carriers that we use, and they have strong renewal rate integrity. So we don't put our clients in a position to suffer those.
Right. Perfect. Okay. And this last one here from Laura. I don't know if this is something we could answer, but she says, so if someone is selling an investment property, they would not take the money, they would get an annuity. Does that make sense to you?
Can you read that one more time?
So if someone is excuse me, if someone is selling an investment property, they would not take the money, they would get an annuity.
That person is probably thinking about the 1035 exchange. There is something called a deferred sales trust that I've been made aware of. I'm not sure the intricacies of how this works yet, but I do believe there's a way to transfer the sale of the house money into an annuity and avoid that. Yeah.
Okay. Okay, cool. Perfect. All right. Thanks, Jess, for that. And thanks, everybody, for your questions. We're going to move on now to the second section, which is show me the money. So hopefully at this point, you better understand how annuities work, what the details are behind them, differences between fixed index annuities, MIGAs, variables, et cetera, and why people would buy them and what the opportunity is looking like. So in this next section, I wanted to spend some time talking about the financial opportunity that they provide the agent and why they're so desirous to sell. Jess, let's start off with a story. Can you think of a story of a client? Of course, don't share any specifics, but if you could kind of encapsulate the financial possibilities of what you can make selling an annuity, share a story that kind of comes to your mind that would help, share this potential.
I mean, somebody just presented me with about a $3 million potential case. And if you look at it from the low end and you multiply, let's say 5%, how much would that be?
3 million, 150 grand. Yeah. So that's like what it could be. And that's off the sale of probably several annuities packaged together. What's a run of the
project? That's a monster project, and it's going to take a lot of time to put it together, to build it right, and to go through the process. And there's a sales process and an after sales process. So that money is not quick and it's not easy. It is definitely hard earned money, but that's the potential. Yeah. And that's on the low end, the very low end, right?
Yeah, low end on commissions. I mean, if your commission's higher, it could be a lot better. But let's talk about a run of the mill case. Give me a run of the mill case. Like, what's an average annuity size that somebody might run into? What are they looking at? What's the income potential?
Yeah, I mean, I would say average case size could be 150.
Ding.
I'm so sorry.
That's okay. That's perfectly timed. I mean, like, now people are paying attention.
I'm so sorry. If anybody knows how, I'm on a laptop and I have a cell phone, and my cell phone messages are dinging on my laptop and I don't know how to turn it off. It's very simple, I'm sure. If anybody wants to let us know how to turn it off, I appreciate it.
Yeah, we'll give you special blessings if you can type into the chat how to stop Jess's computer from constantly dinging. It's actually not that bad. And plus that last one was perfectly timed. So in short, I'll kind of walk you guys through this. So when you sit down with a prospect, and I'll give you a story. My first annuity I ran across. So I was running final expense, and I went into a house, and it was odd. It was in a final expense neighborhood, low income neighborhood, right? But as I'm rolling up to the house, this lady's got a new car, 2 new cars, and then her whole deck has been redone. Like, it's just weird. It was out of place for the neighborhood she was in. So I walked in, sit down, and I started sitting down and talking final expense. You want a burial insurance plan, right? And she's like, no, I got all this money. My husband died. I was just about to divorce him, and he literally died. I'm like, Anyways, that's a whole nother thing. And I know. I ended up with $250,000, and I've spent half of it. Like, I'm just buying stuff left and right. I know I shouldn't do this. So I need somebody to like put this money padlocked somewhere I can't touch it. I mean, she was very honest. I'm like, that's how really everybody is, but nobody's really that honest. So I said, you probably need something like an annuity. I don't know anything about it, but I know a guy who does. So I called up Jacob Anderson, guy who's an annuity guy local to me. And so we ran the deal together. And what he ended up doing was rolling 125,000 of this life insurance money she got into some annuity. I think it's fixed index annuity. And what was cool was that I got a check for $4,000 because we split it 50-50. And I was like, man, this is like $8,000 for 125, 150, something like that. I don't remember the details, but like it was a 2 or 3 step meeting, and it was done. It was closed. And I was like, you can do a couple of those a month. Maybe look pretty well. So with annuities, what you get paid on, in short, is a percentage of the total money moved. Now, it depends on what kind of annuity you're selling. If you're selling a fixed index annuity, it might be as low as 3-4%. It might be as high as 6, 7%. Could be higher if it's one of those low rated companies, et cetera, like we're talking about. But again, depending on the length of time, if it's a shorter term annuity, usually pays less. If it's longer annuity, it pays more. All right. Um, with MIGAs or multi-year guarantee annuities, where the rates are fixed, they're not locked to the stock market. Those typically pay on the lower side of what we just described, 2, 3, 4%. Again, dependent on length, the age of the client, et cetera, et cetera. Right. But if you think about it, just do the math real quick. If you write a 150 grand annuity and you're at a contract that pays 5% at the start because you're getting trained, you're getting support, et cetera, 150 times 5 is $7,500. Not bad. And that's a run-of-the-mill annuity. So we're talking about an almost 5-figure sales opportunity with an annuity, with just one average run-of-the-mill annuity. And we have had deals flow through ours. I remember you had some dude that $1 million annuity off a final expense lead, and it was a huge 5-figure deal for you. So that stuff is all out there, okay? And we're going to talk about how to find these people eventually. But the point I'm trying to draw here is that financially, there's huge opportunity, and you don't need to do huge volume to make that money like a final expense product where maybe the average sale is 300 or 400 or $500, but you got to do a lot of volume and make a lot of money, right? So, a couple other things I want to build on with the compensation model. Again, if I can hear a couple agents out there like, okay, yeah, the money's good, but I've been around the block. What about chargebacks? So how big of a deal are chargebacks with annuities? Chargeback being they buy the annuity, but then let's say they cancel it or they do something to where your commission has to be refunded. Maybe they die quickly. Like, what is the chance of annuity running up against a chargeback, and how does it compare with other products you sold?
Yeah, I mean, that really has to do with a person's integrity. It has to do with a person's sales approach. And so I would say it's a real thing, but it's not something that I deal with on a regular at all. It is such a small concern for me because I make sure that I bring every objection to light in my selling process before I get to the close. So anything that could be a potential con, like pros and cons, anything that
Sure.
could be a downside, anything that could be distasteful to somebody, I'm going to let them know, hey, frankly, this is really important that you understand about this particular vehicle that we're talking about, because I really need to make sure that you understand if this is a fit for you or not. So a chargeback happens within 1 year or 2 years, depending on the company that you're doing the annuity with. And yes, you would owe back the money. Insurance companies are good about how you pay it back. I think some of them will set you up with a payment plan. Some of them will charge you interest on the payment plan, others won't. I've had interesting situation where somebody took RMDs within the first year, and then I ended up having to charge back because that wasn't set up before I got paid. So here's the deal: I was told early on you got to have a chargeback account with $50,000 in it, and of course, if you're a new agent, you're like $50,000. How am I going to do that? Well, little bit at a time. When you make money, and this has always been how I've run my business, I always reinvest my money into my business. Uh, I am not I am not out there spending my money. I'm not living large. I am literally figuring out how can I continue to grow and expand and learn and stay not just afloat, but successful. How am I going to continue to succeed in this business? And most people do go out of business in the insurance space. And then specifically, I'm in such a tiny niche. I'm a unicorn, but I genuinely believe that this is something. It's like the 4 minute mile. Once somebody does it, everybody can do it. It's just a matter of understanding what it takes. So creating that buffer account for chargebacks is really important. It doesn't matter how much you start with. What matters is you keep building it up. So when you do get hit with a chargeback, you're not blindsided.
Yeah, I think it comes down to the nature of annuity sales is that as we're going to hear in a little bit, it's a multi-sale step process. Okay. So unlike life insurance sales like final expense, mortgage protection, probably to some extent IULs, this is not a one call close. And when people buy on the first call, you're going to have more buyer's remorse. Whereas if you're going back 2, 3+ times to a prospect, there's enough room in there to weed out the weak hands that would only be committed if they were cajoled by a good salesperson, right? So I think, in my experience, we've been doing annuities at the DIG Agency since 2016 or 17 in some capacity. I think I've only had like one chargeback or two. It's very rare. Now we're not doing a ton of annuities, so take it for what it is. But they're not nearly as common as final expense. We deal with that weekly, daily, even. But so if you're worried about chargebacks, sell it the right way. Make sure what you're selling the client understands and appreciates. Whoa, man, woo, that scared me. and and make sure that that is the right for them. And you're probably not going to deal with chargebacks like what you would see with others. Okay, so continuing here, let's go down the list of questions. Guys, if you have compensation questions, this is a good time to ask about annuities, that kind of thing. Do you want to get into your favorite companies for annuities? You want to keep this carrier agnostic? I don't plan on talking about companies, Jess and everybody else, just because some carriers get all bent out of shape depending on what you say, or what you don't say. It's your call, Jess, but whatever you want to do is
Yeah, here's what I do want to talk about. Can I talk about the safety of working with insurance companies?
fine. No, save that for the sales section. I think that would make sense there because I'm sure you build that into your sales presentation. So
Okay.
let's talk about that. Compensation questions. Anybody here?
I
Uh,
can say about carriers, highly rated carriers. I love the A plus carriers. I love the A carriers and the A minus carriers.
Perfect.
Strong, financially stable,
Yeah. Yeah.
least likely to become insolvent.
Right. Perfect. Good answer. Okay. Selling annuities for your local area, or can you branch out to phone in other states? Expand on that, Jess.
Oh yeah, I have 23, 24 state licenses and growing every day. Uh, Virtual business is a thing. I've pioneered that pretty quickly when I opened the doors with my annuity business. And so some people really like to be face to face, and that's okay if you do. I don't believe that you're going to run out of people in your local area to work with. I genuinely believe that as long as you're out there doing the work, you're always going to have people to work with. However, I do believe that if you are willing to sit behind a computer, be on the telephone, you can reach a lot of people across the country in a lot of states. There are components that you have to keep up with in regards to training and your licensing, but I do work virtually and I do have licenses across the country.
Do you always, like for the virtual sales, do you always close it virtually, or do you go see the client? Is it a function of how much money you're moving? What's kind of the general direction
No,
there?
no, my virtual clients stay virtual.
Okay. Okay, cool. All right, other questions here. How can I start working with Jess to sell annuities? I already have a life and health license in 5 states.
So I have a private group of annuity brokers who are business building with me on Mondays. And so we talk about all the nuts and bolts of how to get started with your business. And we talk about sales, we talk about leads. Really, there's nothing off the table there. You bring all your questions there and we talk in a forum. It's a really great community of agents who are digging their heels in and they're willing to share their best practices with one another, which I think is also very rare because some people like to keep their cards close to their chest. They don't want to share what they're doing. This group, it's iron sharpens iron. So it's Monday mornings. We meet on Zoom. I've got a link. David, can you address that?
Let me
It's
do
7.
this. Yeah, I'm going to do this, guys. So where I would like you guys to go is davidduford.com. I'll hyperlink it. It's in the chat, guys. Hold on one more second. davidduford.com/ISS. If you go here, and let me just share the screen so people can see what it's about and how it's going to work. So just bear with me, guys. Okay. So you'll go to this page, and this is the Insurance Sales Success Group. It's a free group. It has all of our best training. 95% of what we train is located here, and you can just get in with just an email. You don't have to give us your, second born child or whatever. You just sign up. There's no fee. It's free. All right. And so once you get inside of the training, just to demonstrate here, you go, this is a school group. Some of you have heard of school with Alex Shamosi, et cetera. We've been doing it for a while. Inside of the calendar, one of the regular recurring trainings is with Jess. And you'll see her annuity training here. You'll get the Zoom link right here, and you can jump in. And there's always a recurring opportunity to come in, attend training, and learn from Jess. If you like this, she does this and even more detail for free on here. And then from there, she talks about the next steps to join her team when you have an opportunity to bring a client, and shares a link she'll share at that point that would allow you to inquire about signing up. Again, that what I just showed you is free. There's nothing to buy, and it's pretty good. Pretty good. Okay.
Thank
Let's see
you.
what else. Yeah. Do you have any problems selling remotely with older people? Do you run into any technological issues? Anything like that?
No, I have people who even just have rotary phones.
Yeah. Yeah. The old landlines. Yeah. So,
Really. Yeah.
I think you know that where I think Spencer may be going with this, and or at least what I may be thinking is like, our clients are old, they don't know how to use anything, but like I have a buddy down the street that was helping me with some Instagram videos, and his grandma, I saw this old lady comment on one of the videos we did together, and it says, "Love my Alex," is what he said, and he's like 20, right? And so I immediately checked her out and I took a picture and sent it to him, and I was like, "Hey, is this your Nana?" She's like commenting on your videos, and he's embarrassed and laughing. But I was like, "How old is your grandma?" 78. I said, "She's on Instagram at 78 years old." I'm like, "Yeah, of course. She's been on it for years." She was harassing him and saying, in a fun grandma way, of course, for years, right? So the point is, a lot of our clients, especially with the transition from pre and post COVID, or at least pre-COVID and then COVID, like people were forced to adapt a remote approach to orienting their lives, including the elderly and the boomers. So there are more people now technologically capable. Now, maybe not completely capable or completely literate, but as you get into the annuity class of people, they tend to be a little bit better off income wise. And with that comes, I think, some comfort level with technology. So long story short, if you're going to do remote sales, it's there. You just got to have a model in place that supports it. I think that's the key thing. But face-to-face still works well too. It definitely does. So anything you want to add to that, Jess? Or is that good?
That's great.
So in short, how much money can you make with annuities? A lot. You just got to find enough people to talk to, and you've got to find the right prospects. It's just like any business model where there is an opportunity to make money. It really comes down to, one, how you sell it. And we're going to go about that in just a second to discuss. And then number two, how you find them. So I want to start there, Jess, because Josh is going to pop on the line here in probably 15 minutes or so, and we're going to just have him jump in and talk and promote his webinar that's coming up. But now moving and transitioning into marketing. Again, prospects, as with any business, is the lifeblood of your business. If you don't have people to talk to, guys, no matter what you're selling, water filters, final expense, annuities, if you don't have anybody to talk to, you're dead in the water. You've already failed. So while it's critical to understand how annuities work and what the details are, I would say it's arguably equally, if not more critical, to know where to find people that actually are interested and capable of buying. And so what we're going to talk about in this section is a plethora of strategies that you can use, whether you have no leads or whether you already have leads, or you have no money or you have money, that you can implement immediately to start finding people to raise their hand and express interest in annuities. So I think it'd be cool to kind of recap your start with annuities. You actually didn't start with annuity leads. Can you talk about how you got into the annuity space and with which marketing method and kind of what you found out doing
it? So I started with direct mail leads, and you had recommended through final expense training a particular company. I tried a couple different companies that you had recommended, and really, it was a great opportunity for me to learn that there's really no such thing as a good lead or a bad lead. It really falls on the agent. And do you have an understanding of your product? Do you have an understanding of the services that you can provide? Do you have a process to guide somebody through to connect them to the product that you have to offer? If you got those things in place, and somebody to talk to, you're good.
So real
So
quick, what you're saying is you use annuity leads to start, right?
I used your final expense leads.
Wait a minute. Final expense leads to sell annuities? How is that possible? Aren't these people all broke, deadbeats, and
It's
barely
such
alive?
it's a gold mine for annuity leads. Anybody that's looking for the most cost-effective way to anyone who's looking for a cost-effective way to uncover annuity leads, you got to have cash flow and working final expense and asking a few discovery questions will open up doors to annuity sales. I've heard a statistic 1 out of every 6 is going to uncover annuities. Well, guess what? You guys, I had back to back 6 annuity clients. So I was in final expense for 6 months, door knocking. I started with age leads. Dave said it couldn't be done. I sold 6 in my first batch. He said, I really recommend that you move to a higher quality lead. I said, okay, but point proven, I'm an odds to fire. But why? Not because I'm magical, not because I'm special, because I'm willing to do the hard work. I'm willing to look fear in the face and go to those trailer parks. I was willing to go where there was no trailer on the land, right? And it's 100 and almost 20 degrees in the summer, and my laptop was dying because of the heat, and I'm wringing out my clothes. But this was my final expense journey, door knocking, and I'm so grateful for the experiences that I had, and guiding me to where I got to. There's no shortcut to success, you guys. The path is through to get where you want to go. You don't get to a destination, you go through final expense, you go through the door knocking, you go through the leads, and then you uncover these opportunities because you're in the trenches with these people. So in any case, door knock, people were telling me they had money. This was my second set of, so after 6 months in final expense, my next 6 months was all annuity leads. And I think I sold like 6 policies in that next 6 months. And
So,
it was
so
1.5 million in my
how much
first six
again?
months. 1.5 million.
All from final expense leads.
Yeah. So not even $100 probably.
Yeah.
Just 3. I think
Yeah.
there were 3 leads.
Yeah. So what's the moral of the story? So one strategy you guys can do if you're already doing some kind of insurance marketing and you're thinking of, well, I don't want to give up what my core activity is. If you're looking to cross sell something, think about annuities. Why? Because if you're talking to people, especially in the older demographic at or close to retirement, then they're probably already having these conversations in their head. And we're going to talk about what Jess says here in a second. But when you know what steps to take and what questions to ask in order to uncover the opportunity, it doesn't matter that it was a final expense state regulated program lead. It could have been any kind of lead. When you are capable of asking people about annuities in the right way, any lead becomes an opportunity. So if you're out there already doing work, just understand what we're about to teach you. Maybe you execute this and find an annuity that's just sitting out there. And then you can, as you'll discover, have Jess help you close it. So we'll get to in a little bit. So you mentioned what, a 2 or 3 question word track in order to take that final expense lead and move them to an interest in annuities. Can you detail that process, please?
I mean, so simply put, you just got to find out what their pain points are. What are you most concerned about in your retirement?
Okay.
What's your greatest retirement concern? And what do you want your retirement to look like? So you want to find out what their greatest desire is too, because ultimately we're retirement planning with them. And so we need to understand what their objectives are because we're going to customize a plan specifically for that person.
So let's role play this. So I'm the 75-year-old Mildred, right? You are the agent. And go ahead and ask me kind of how you would get into this so that we can kind of demonstrate this to the audience, and I'll just play along.
Well, Mildred, I heard you say that you really don't need burial insurance
I'll
because
just
you.
throw me out back and bury me. No big deal there. Got plenty of money.
Well, do you have anybody that you're planning to leave that money to?
Yeah, I think my son David would really appreciate it.
Okay. And do you have a plan in place that avoids probate so that David can get that money right away?
I mean, I just have it in retirement account. I haven't really done much beyond that.
You know, what I find, Mildred, is oftentimes when folks get to be retirement age, they actually have money in multiple accounts that they sometimes have forgotten about.
Yeah.
And one of the things that I help folks do is get on the phone, call up financial institutions. We look through some of your paperwork, your statements, and I can help you to find some of that retirement money that you may have forgotten about from an old 401k or an IRA. Would you like me to help you with that?
Yeah. So let's say I say yes to that. Fast forward, we've done all this calls. What happens after that?
Great. I'm so excited for you, Mildred. It turns out you had an extra 50K sitting over in this old 401k. We've got another 100,000 over here. These are all qualified accounts. We could actually consolidate these into one account that's protected, and we can assign David as the beneficiary on that account. And then when you pass away, this money will go directly to him, avoiding probate. Do you like the sound of that?
Okay. So what am I moving it to another retirement account, or like what are you talking about?
Yeah, absolutely. We can continue to keep those funds tax deferred so you're not hit with a big tax bill. And basically, we're just consolidating the accounts. And also, we're going to remove market risk because we can put them into an annuity, which will protect you from losing money. And you'll still continue to make money on this annuity.
Dave Ramsey hates annuities. Well, not like anybody listens to him, but
You
uh,
know,
I've heard
I
annuities are a
really
scam, Jess. Is that true?
I really like Dave Ramsey. I took his Financial Peace University course early in life, and it really helped me a lot in my early stages. But as I've grown into my 50s here, I needed to find new strategies that were really going to work for me in my retirement. And I found personally that I cannot afford to lose all the money that I've worked for throughout the course of my life. And annuities are allowing me to safeguard my retirement assets and continue to grow them.
Cool, cool. Okay, so hopefully, guys, that helps kind of how this transition would go. So you're kind of poking and prodding with, when you hear they've got money, you start asking about like doing a review of some sort to kind of like just gather it all up, and then at that point, if I'm recapping here, then that's kind of when you go with the proposition of bundling it together and offering some benefits like, no market loss risk. That's maybe they don't get right now.
Would you like me to give you more details of what a fact finder would include?
Yes, in the sales section. Yeah, I'm prompting this, kind of jumping ahead, but I do
Yeah.
want to throw this in there because it's so relevant with leads. But let's save that for the sales section because that's definitely really valuable to do. So,
Okay.
okay,
In the conversation with Mildred, well, in my clients who I ended up working with, what ended up happening is people want to work with someone they know, they like, they trust. These are three facets that you
yeah,
teach in your sales. And it's absolutely true. My style is conversational. I really like people to feel engaged with me. And in the conversations, it's always blindsided me how people literally come out of the woodwork. They'll walk away and they'll come back like I'm face to face with documents, and they'll have old annuities, they'll have
right,
financial statement. Or if I meet somebody literally in the parking lot, I just went and ran an errand, they will, when they ask me what I do, we're having a small conversation, they ask me what I do on one foot, they're giving me their portfolio. And I'm like, wow, but that is the trust factor. And so
sure,
it's really helpful to have a process, and I absolutely believe it's instrumental. It's required. You have to have a process so that you're operating from a structure and a framework. It's also important to be organic and to incorporate the tactics or techniques that you're aware of in a personal way, because this we're not robots.
right, right, 100%. Okay, so we're gonna go ahead and shift gears, and I'm gonna let Josh on here. I've just given him a heads up
Okay,
that we're
great.
about to talk on live once he gets in. So I'm gonna let him in. And then as Josh gets set up here, I'll just take some questions here in the chat or just read some stuff. Do you have an AMS or CRM system to keep track of annuity sales? For sure. We'll talk about that later. And then Dave Ramsey hates permanent insurance, only likes term as well. Buy term, invest the difference. Yeah. But if you sit down and actually explain things and how it's relevant to the client, a lot of them will change your mind. So no worries. Josh, are you there?
Hey, how are you guys?
Hey, Josh, thanks for being here. We're on the annuity sales and marketing. We're doing it live on YouTube. Good to have you,
Oh,
man.
awesome.
Yeah.
Hey,
So,
everybody.
tell us why you're here today. Give us a little insight And
Oh man. Well, I mean, I heard about you guys doing all this annuity stuff, and we were getting ready to, promote one of our products with you. So we thought we'd kind of cross, promote these things. So yeah,
sure,
everybody's
sure.
wanting to sell more annuities, and we got the lead generation, the automation, the AI side of things. So hopefully we can help with that.
Yeah, give us kind of a 1,000-foot overview of what's coming up, and then if you've got any links that you want to share, just throw them into the Zoom, and then I'll throw them into the chat.
Yeah, let me grab that link. So yeah, next week we're gonna, well, you and I are gonna be hosting a annuity sales accelerator webinar. I guess 1,000-foot view. We just help agents, automate their annuity lead generation, appointment setting. So, you can just go out there and, close deals. Selling annuities is great, big commissions, right? And we can all cross sell off our final expense leads, our Medicare leads. But it's nice when you can talk to people who have seen an ad about annuities. They know what annuities are. They want to schedule an appointment to do an annuity and type of appointment with you to see, and they answer questions. They say stuff like, yeah, I've got at least $100,000 in investable assets. I'm looking to grow my nest egg. I need money now. They answer all sorts of questions through the process. It's a lot different than even working a normal insurance lead. These people are specifically looking for this. They're in retirement age. They need to roll something over, and so it's a much different conversation. And so we're just going to show everybody how to do that pretty easily.
So guys, real quick, I just threw the link in the chat. So if you're watching the recording of this, the live chat should scroll as if it was live. So you should see it in the link. Also check the description, but it definitely is going to be in the chat link. And then what you'll do is you'll just click on that link. You'll get a landing page that talks about the webinar that's coming up, how to learn more about what Josh is talking about. So go ahead and do that. And Josh, anything you want to add to this before we wrap it up and then move on with Jess?
No, yeah. We just we're gonna help you guys, show you how you can get annuity leads as low as $25 a pop. That's the best price you're gonna get out there, and you get to do it yourself, which is becoming very important, especially with some of the new rules that are dropping down from the FCC come January. Buying leads from lead vendors may no longer be an option for many agents. Okay, so being able to do this on your own, and you're thinking, oh, I don't know anything about lead generation. Don't worry, we make that part super easy. You don't have to know how to do that. We've got a plug and play, our one-click ads launcher. You literally press a button, 45 seconds later, it will deploy the ads automatically for you. You guys just make sure you join in. We'll answer all your questions next week.
Perfect. All right, guys, just click on that link in the chat. And Josh, thank you so much for being here, man. Appreciate you.
All right. Appreciate you guys. See you next week.
Take care.
Thank you, Josh.
All right, so Jess, let's take a look here. What other paid sources of leads have you worked? And kind of give us your, good, bad, or ugly observation.
Oh, it's so tough because on the one hand, I want to give a plug to someone, and on the other hand, if I'm going to give a whole overview, then maybe I shouldn't say reveal a source.
Sure. You don't have to give specifics. Just like say, hey, I did this, like a seminar marketing thing, or I did that. Like just something like that would be helpful.
Okay. So I actually was in a really fantastic opportunity. I was invited to beta test a rolling out of a lead program. And if I had to recommend something for new agents, it's batting practice. And what that means is getting in front of as many people as quickly as you can while you have the least amount of experience, because you've got to have conversations. And what this beta testing program allowed me is a massive influx of leads. So I had hundreds of conversations with people in my first year. So I did virtual business. These were state employees. I actually was just recently talking to an agent who's working a very similar program right now. It's not through the same source that I went through, but apparently this program does exist through another provider. I do not believe that there are some fabulous lead sources and some junky lead sources. I really believe that it's up to the agent to convert the prospect. And there will be people who are qualified in every group of leads that you have, and there will be people that aren't. Sometimes with a good lead vendor, you might get a batch of leads with low net worth individuals, and then the next batch you may have high net worth individuals. That's the luck of the draw, and that's just how it goes. And you can't blame a lead vendor per se for that. But what I did is I was setting up my calendar. I used Calendly. my appointments were actually scheduled by the prospect. They would sign up on my Calendly, and Calendly set out automations for me. So I would have appointment confirmations, I would have reminders, and I had thank yous going out. Now, automations are very important, and those specifically are 3 key points that really ensured success in my appointment process. So I'll reiterate those for you. I used Calendly. People actively set up appointments on my calendar. I had confirmations going out to them once they booked. There were reminders sent in advance of the appointment and a thank you sent afterwards. This really helped touch point wise. Data suggests that it's taking double the amount of touch points that it used to in order to move a person, in order to move the needle. It used to be 11. I just recently heard 21 touch points. So it's really important to understand how valuable the automations can be. And so I'm doing these appointments every hour on the hour. Calendly allowed me to build in a buffer time, which is really important. You've got to have a little break in between your appointments because you've got to have data entry, whether you're using a CRM, whether you're writing notes in a file, you're putting a sticky note, whatever you're doing, you're scheduling their next appointment. So my batting practice developed the skills within me that I needed to be successful when I had quality clients in front of me. You can have the highest net worth individuals in front of you, but if you're not competent, you're not going to be able to work a sales process with them. So the best thing that the leads can do for you is give you batting practice while you develop your competence and your sales process and your skills in working an annuity system.
What do you think about seminar marketing in the annuity space? Good, bad, ugly?
Yeah, I actually was working with an agent who was duplicating your final expense seminar program and was able to write an annuity sale from it. I think it's fantastic.
But
But
he was
from your
doing final expense leads.
he used final expense leads. He did a free seminar. He provided pizza and water, and then he gave like a $20 gift card or something if people would complete, just write down for him their contact information. And then out of the group, he had one that he did an annuity sale with that was a 6-figure sale.
Wow. Wow. So yeah, it's even at seminars. Perfect. And normal seminars, I mean, in annuity space, like retirement seminars, I mean, that's a pretty big thing. What's the success rate in your experience? Do you know other agents that do them well?
Yeah. So dinner seminars have always been around. Well, they've been around since I've been in the business, and they're notoriously expensive, and they attract people who just want to come and have a steak dinner for free. And then are they lucrative for a seasoned professional who's very clear on their process and the execution of doing the seminar and how to follow up with the lead and how to move them through a sale? Yes, it can be lucrative, but it requires a lot of planning and seamless execution as far as I'm concerned, and a lot of money. And I don't recommend it for new agents at all. And I would really exercise caution in terms of setting yourself up for seminars. You've got to have cash flow to support your initiative. So you're not just going to do one seminar and be great at it. You're going to have to do a series of seminars, and you're going to have to work out the kinks at the venue. You're going to want to make sure you've secured the venue for a series of seminars. So there's a lot of things that go into it that I would say, unless you've got a bankroll, I would stay away from it.
Right. Right. So, what other strategies are there? Networking, your warm market. What have you done there that's worked?
Absolutely, yes. So let's talk about networking. There are tons of community events that are happening every day in everybody's community, and I'm sure there are calendars that we can have access to within our communities and figure out where we want to go and when. A person could go out for the next 30 days and be able to shake hands and hand out boxes of business cards. That would not be an issue. For me, it only took one. What I did, I went to a CPR course that was being offered by a resource center in my community. And the resource center asked me when I got there, well, who are you and what do you do? And I told them, and they said, would you be interested in doing workshops around here? Would you be willing to offer your services? I said, sure. I said, let's start with one. Let's just see how it goes. Let's see how I'm received. Let's see what the feedback is. They ended up having an extra office available. They offered me office hours out of their office. I said, I'd like to do just 2 days a month, and I'll do them on Fridays and 9 to 5. And then please have your receptionist schedule the appointments for me. and close together so that I don't have one at 9 and then one at 5. Let's do 9, 10, 11, 12. So if we don't fill up the calendar, I'm only here for a block of time. But yeah, I was able to get on the calendar, do workshops, have office hours. I did a resource fair. I was a vendor at a resource fair, was able to meet people that way. I did some pop-up events. I worked creatively with, I think you talk about doing this like Fiverr or people that are, graphic designers. I've hired plenty of vendors to assist me in my journey of creating marketing materials that I play with graphics and messaging and, verbiage, words that will resonate with people. And then I'll put those out on my table. And then I'll have like clipboards where I have sign in so people can put their contact information. I'll have a calendar where people can actually book on my calendar right then and there. I have business cards, I have folders, I have little treats, toys for kids so that people can come by and interact and engage with me. And I always have an assistant with me as well so that I'm not standing there by myself and there's a whole lot of people lined up and they can't get to me.
Right. Perfect. Good idea. So what else works in your experience or what you've heard from reliable sources for annuity prospecting or lead generation that we haven't mentioned yet?
Working our warm market and working our book of business. So warm market, friends, family. I didn't want to do that initially. I really wanted to get my at bats with strangers, but then a few years in, and I'm 4 years in now, but a couple of years in, that's when I started really being willing to have conversations with my family and say, listen, I'm not here to sell you anything, but what I would like to do is just share with you the information that I've learned that I deem valuable, let you know what I've been repositioning my monies into. And, you can simmer on that. And so then one by one, my family members began to get on board and ask me questions about how annuities might be able to work in their portfolio. A book of business. So we have to have cash flow in order to, I believe, build a successful annuity business because there is a lot to learn. People liken it to drinking out of a fire hose. Don't be in a hurry. Don't be in a rush. Don't ever feel pressure to close a sale. This isn't the business for that. But if you have cash flow and you've got, let's say you're working life insurance and you have the ability to add on annuities into your practice, I think that's fantastic. And you already have a book of business of people that you can reach out to and say, hey, let me ask you a couple of questions. I've recently, I have access to, and you can segue into it. I now have access to a new line of programs that I can make available to you and wanted to see if it might be a good fit. You can segue your conversation into your current book of business, just calling them up, checking in on them. Maybe you're doing an annual review. Maybe you have a meeting about your current whatever it is that you're working on, and then you start asking them some discovery questions.
Perfect. What doesn't work? Is there anything that may be surprising or a system that is talked about that doesn't work in the annuity space? Like anything to avoid?
High pressure sales doesn't work.
Sure. What about marketing wise? Anything that's, you've heard through the grapevine or you yourself have done that's just been a waste of time or money?
So the way I look at it is lemonade. I reinvest my money all the time. I just keep pouring it into my business, trying new things. And I've definitely had times where I thought, man, I just poured out a bucket load of money for what? But I say to myself, what did I learn? What can I take from that experience?
Sure.
I may not have gotten what I went there for, but what did I gain from that experience? Because I'm not going to let my money go to waste.
Yeah. I'll throw in a few things here. Just, I think it's just like you said, it's just as valuable to learn what not to do as it is what to do. Sometimes you arrive at what to do versus what not to do. It's just an iterative process all business owners go through that it's unavoidable. The key is to learn the lesson the first time, not repeat the same mistake over and over. That's how you go broke. Ask me how I know. Regardless, where is it going to go with this? When you're doing any kind of lead generation, just some pro tips. Take it from me. Been doing insurance since 2011. Don't do a sample size that's too small. Okay. So if you like this idea of, some kind of paid lead system for annuities, don't just put $1,000 in and then decide if it's any good. That's foolish. It's not enough of a sample size because you have the variable of the leads. Most leads suck. They're not going to convert. It's always it's a smaller margin that does. So you've got to have enough volume to get a possibility of conversion. And then the flip side of it is too, you may suck. You probably have stuff to learn. Serious, being serious, it's going to take time for you to develop. So you may miss deals you otherwise would have gotten 6 months in if you were fully committed. So make sure when you're doing any kind of marketing that you do a sufficient enough sample size. And with annuity leads, I would imagine don't convert the same percentage as, say, a final expense lead does. Like, for example, in our free lead program, 9 or 10% of the leads convert to a sale, right? But annuities probably aren't 9 or 10% of your Facebook leads, probably 1% to 5%, somewhere in there. So you got to make up for that lower conversion with more leads. Just no way around it, or you're never really going to truly know if it works. The second thing I would recommend too, again, just general pro tip advice, when you find something that works, do more of it. What a lot of people do is they get successful, and then success begets success. Success prevents more success. You take that money and then plow it into something else that sounds interesting or lucrative, or maybe you're avoiding some pain. Like, for example, again, final expense. When I started, I followed the same boring direct mail strategy face-to-face agents did. And then I got tired of running into deadbeats, and I created this awesome lead, I thought, in my mind, and a totally different approach to getting people on the phone. And it turned out to be nowhere near as effective as the boring old kind of leads. Yeah. And so what did I learn? I learned that sometimes you are your own worst enemy. And so when it comes to leads, when you find something that works, you just need one thing that works really well. Figure out how to scale it. Figure out how to do more of it. Okay. And what you'll find is if the thing can scale, then there's where your income is. So as opposed to, and again, I'm not a big proponent of lead diversity. I don't think it's necessarily bad to have different sources of leads, but as a business owner, it's a lot harder to manage multiple sources, figure out how they work, et cetera. Just find something that works real well and then ride that horse until it doesn't. That's what I would recommend. Okay. And then again, if you guys don't have the money to do what I've just described, then stick to cross-selling annuities or working your warm market. Don't give up everything for annuities right out the gate, because one person asked, what's the sales cycle of annuity? Well, it takes multiple sales calls. That can be weeks, months even. And then you got to sell the deal. It's got to go through suitability and compliance. That may take more weeks, more months, right? So it's a time horizon issue that maybe another product like life insurance doesn't have. Not to say that it's not, that's the reason you shouldn't do it. You should still do it if you like the idea, but you have to take that reality into account. And if you're just not financially secure, then cross-selling what you've already got, or a book of business that you've already got, or something, is probably a better strategy than plowing a ton of money into leads and then taking months before you actually get the sale, right? Because you may go broke in the meantime. Anything you want to add to that, Jess, before we move on? And then I'm going to take some questions from the chat.
Fantastic, David.
Perfect. Okay. I don't think there's any questions, but let me double check here. Yeah, I think that's good. So let's transition now. We're going to talk, now that we've talked marketing, we're going to talk about the sales, and really spend the rest of this time talking about, one, how to get into an annuity conversation, how to use the fact finder, Jess. We're going to learn what that is, how it works, etc. And then I'm going to kind of do some role playing with Jess. I thought that was pretty cool, Jess. I think the audience liked that. We'll do more of that when necessary. And then talk about closing, objections you'll hear, resistance you'll hear. I want to make sure that everybody kind of understands what they're getting into. And then let's make sure we also talk about suitability, what that is, why it matters, any compliance issues, etc. So where do you want to start with sales? Like, from a presentation standpoint, take it away.
You covered a myriad of subjects, and my brain is like ping-ponging, and I'm like, I just hope he's on one question for me to answer at a time.
It's like, start somewhere. That's like my question, right? Yeah, so maybe not the best. Okay, so let's start from, how do you start a presentation for annuities? Let's go that route.
Okay. Well, let's talk about the discovery process, because that's really the first step. When we're talking to a prospect, we have to understand, is this somebody that we're going to want to continue to have conversations with about their retirement moving forward? So oftentimes you're going to hear people talk about fact finding or a fact finder. But I decided to use the word discovery process because this is really what we're trying to do. We're trying to uncover what are their greatest pain points, what are their desires in retirement, when do they want to retire, what assets do they have, and are they continuing to contribute to those assets and in what percentage? Where are those assets? What is their income? What are their expenses? What problem or problems are we trying to solve? Is there an income gap? So those are really, that's the overview of the fact finding process.
So the fact finder allows you to accumulate all these facts, get them down on paper to present a logical argument based on what the client's problems are or their pain points, basically, right?
And more details in that regard are, what is their age? Are they married? What is their spouse's age? Do they want the money to live on? Do they need an income source, an additional income source? Is there an income gap between their income and their expenses, or in their retirement income and expenses? Do they want to leave their money to beneficiaries? Do they need both? And do they have a long-term care plan in place? These are additional questions. Have they started taking Social Security, one or both of them, if it's a married couple? And or when will they plan to take Social Security? What is their plan? And what are their thoughts about their retirement? Do they have a plan at all? Are they working with a financial advisor? And also, I just lost the last one. I'm sorry.
That's okay. So financial advisor.
Who else would be involved? Who else might be involved in this process? Because if they
right.
said later, oh, I need to talk to my daughter about this, find out in the very beginning who else they may need to involve in the process so you can get them on board from go.
Gotcha. Right. Very important.
Yeah.
So let's go back to what we discussed earlier. I'd like to go through this with you so we can do a case study. So we're going to take, I think it was Robin's client, 55-year-old. I'm going to be the 55-year-old. I've got 75,000 from an inheritance. Walk me through kind of a basic fact finder. Just rehearse from memory is fine to collect the information you need to make a recommendation.
Okay. Well, David, thanks for taking the time to talk with me today. You may or may not know that I specialize in safe money retirement planning. So what I like to do is help folks to identify if they have concerns about retirement and what those are. Right now, how are you feeling about your retirement plans?
I mean, I don't really have much. I got, my uncle died and it shocked me. It left me with $75,000 and, I'm 55 and I mean, I haven't saved anything. That's all I got.
Okay. So do you have an old retirement account maybe set up from a 401k from an old job you may have forgotten about?
Nothing like that.
And what about an IRA? Did you ever set anything up like a traditional IRA or a Roth IRA?
Nope.
What about stocks or bonds, mutual funds?
No, I cashed those out to buy a car 10 years ago. I don't have anything left.
Okay. How long ago did you receive the inheritance money?
Been 2 years. 2 years. My uncle passed away. It finally transacted in probate or whatever, and I got it about 18 months, 2 years ago, thereabouts.
I'm really sorry to hear about the loss of your uncle. I'm sure you'd rather have him than the money right now.
Oh yeah.
David, so when you bring to me, side note, inheritance money, there are laws and rules about inheritance money. So this is actually a little bit tricky.
Okay.
And I don't really want to get too deep into it because I don't want to make a mistake on the video. But laws have changed in the past few years regarding how inheritance money is handled. And so I'll just give you an example. I've dealt with inheritance money, 2 different carriers. One carrier had one set of stipulations. The other carrier had a different set of stipulations regarding the same prospect and the same date of death for the person. So it's sticky.
Let's say the 75,000 is an IRA or a 401k. Let's say 401k.
Okay, great. So when do you plan to take Social Security, David?
62, as early as I can. I'm sick and tired of working.
Sure, of course. So what about a spouse? Are you married?
No, thank God.
Has anybody talked to you about Social Security and how you can maximize your benefits?
Nope. Nope, I know nothing about Social Security. Nothing at all.
Okay. Well, another side note, with Social Security, full retirement age may vary per person, but
Yeah.
let's just say this situation by date of birth, but let's just say in this situation, your full retirement age, David, is 65. So
Okay.
I want to just let you know, Mr. Prospect, that if you do take Social Security at 62, you're going to get a little bit less than if you wait until your full retirement age of 65, where you'd better be able to optimize your
How much
benefits.
are we talking about here? Like I make 50,000 a year. Do you have any idea what the difference is?
Well, sure, we can actually go to the website and we can use the calculator and we can input your
Okay.
numbers. Another side note, but I think it's relevant and important for those listening today, 2035, Social Security is anticipated to be decreased by 25%. So because we're looking at the right now, if you're 55 and I was suggesting that your full retirement age is 65, that's where it's going to be 25% less. You may not be worse off by taking it at 62. So I do want to add that in.
Okay. So there's very, and this is, guys, as a side note, shameless plug here. This is what S. Dutch Matthew asked. Like, this is why we have the program here for those of you interested. You don't even have to be part of the DIG agency. You can write business elsewhere, final expense wise, but Jess will work with you on annuities, mentor and coach you through a lot of these little side notes. There's a lot of them. Let's just face it. It's unique. Every client's different, and help you design a case in order to help get an annuity issued. Right. So just keep that in mind. Best way to learn more is by going to, I'll put it in the chat again, davidduford.com/ISS. Come to an annuity sales training, and then Jess will share how to apply for partnership with her at that point. So okay, so
So you've
let's
got this
say,
401k.
go ahead. I'm sorry.
Yeah. So you've got a 401k. It's got 75,000. You're thinking you're going to take your Social Security at 62.
Yeah,
And
70,
while you're working, what are you bringing in terms of income annually or monthly?
about 50 grand a year.
50 grand. So per month, roughly, do you know about how much that is?
4,000 ish.
Okay, great. And what are your current expenses?
Well, the house is paid off. The job covers health insurance. I mean, just the car payment, that's $400 a month. Cables 300. Let's see what else. Regular food 1,000. My expenses about 2,000 to 3,000, just depending on the month.
Okay, great. So what do you think that you're doing with the extra money that you have left over each month if you don't have savings, but you've got a surplus of about $1,000 to $2,000 more per month? Where do you think that's going?
I mean, there are some months where, some stuff comes up, had to buy a new washer and dryer, right? That kind of stuff. So it's just,
Okay.
I have a little bit left over every month, but then there's just things that pop up and there's not much left.
Okay. And now I understand you've got this 75,000 in the 401k. And have you touched that at all?
No, no,
Do you have any plans to reach into that, to dip into that?
I don't want to touch it. No, I mean, that's it. That's all I got, and that's kind of the thing is I just want to, when the retirement comes, I just want to have that safety net, right? So that when something happens, if I needed to use it, I have access to it.
Okay. So once you reach retirement, you're still planning to keep that as a nest egg, but you're not planning to dip into it.
Yeah, yeah, just if I need it, but I
Okay.
don't want to use it if I can help it, if that makes sense.
Okay. Uh, how do you feel if I make a few recommendations for you today?
Yeah, go for it, please.
Okay. One of the things that I'd recommend is really thinking about putting aside money every month and building yourself up a savings account. And one of the best ways that you could do that is dedicating yourself to, let's say, $500 per month. Now it looks like you've got a potential 1,000 to 2,000, but let's just say 500 is the standard amount that you want to be sure that you put aside. And you can automatically have it deducted, transferred from your account into it. Let's say you have a checking account at Wells Fargo, you want to you set up a savings account at Wells Fargo, you can link the accounts, you can automatically have the money moved over. That would be a really great way for you to start creating a nest egg. And one of the things that's really important that I discuss with my clients is having 3 to 6 months of bill money at minimum in case of emergency. So when your car dies or your air conditioning goes out, you've got something to dip into. You think $500 would be doable for you?
Maybe. Not opposed to
Okay.
that.
Okay. And with that 75,000, we do have the ability to protect that money from market loss. We could move it into an annuity where you could still continue to keep it tax deferred, and it can grow. It'll have a participation with market growth. So maybe not capturing the highest of highs, but you'll never lose money in a down market. The thing about this is, without having your own nest egg, we wouldn't be able to move the entirety of the 401k. You actually have to have a portion of funds separate. But David, here's another side note for you. Somebody who's going to get an annuity, they need to be 59 and a half or older for that 401k to be considered liquid. So you would not be suitable for an annuity in this case situation without any kind of liquid funds. But now let's say you, as my prospect, are 59 and a half or older, we could do a partial transfer from that 75,000, keep some of it in the 401k because it's considered liquid, and move the rest of it over into an annuity.
Okay. So in this case, if it was beyond the requirements there, that's when we can move money and start thinking about this, right? Okay. So let's say I'm 59 and a half. Let's run with this. Okay.
Let me cover the concept of suitability. For a person to be able to get an annuity, they can't just fund it. They have to go through a process of approval through the insurance company. And how a person is deemed suitable is if they have enough funds in reserve that should they have a crisis, they're not going to reach into their annuity to take the money out. That annuity is supposed to be money that's absolutely set aside for retirement purposes and not taken out. There is something called a surrender schedule or surrender penalty or surrender charges that are associated to annuities that are penalties for early withdrawals. So a person is not going to be readily able to take money out of an annuity. There is only a very limited element of liquidity. It could be 5% or 10%. It could be starting in year 1 or year 2, depending on the company and the product that's chosen. But the important point here is that a person, in order to be passed through suitability, they're going to need to have emergency funds as a nest egg first to get through the process of suitability.
Everybody get that, guys? So like, if this is a client, I think even at 59 and a half, they can't move the full 75 over because they need to have liquidity, meaning access to money immediately in case they need it. So it's like, we've had this happen, probably happens everywhere in the annuity space, where you think you're going to move this big chunk of change, but the carriers, and there's probably variations of tolerance based off of each carrier to some extent, but that's something they're going to consider. Like, well, does he have anything else if it comes on hard times? Because we don't want to lock all of this money up, just some of it. Is that accurate, Jess?
Absolutely. Some companies, just to give finer points, will say based on their age, we may take up to 75% of their funds into an annuity. Some will only take 50% of the funds into an annuity, and then there's 60-40. So it really is carrier dependent and the age of the prospect.
So a couple of things I want to hit on here in a sales presentation. I'm thinking of objections, right? Like issues that I think the layman who's just hearing about annuities, or they've only heard negative stuff from Dave Ramsey, like how they would respond. So the first thing I would think of is surrender withdrawals. In other words, what does that mean? That means, well, you can't take all your money at once. So my objection to you, Jess, let's hear how you respond, is like, so if I get this annuity, my money's all tied up. Like, what happens if I need to draw money out? Like, that's not good.
Yeah, so that is a really great point, and something that needs to be considered at this time before you would ever enter into a contract like this, is to say, okay, well, how much do I really need to have on the sidelines? And then you keep that portion of funds available and only lock up or tie up what you're willing to set aside that you know you're not going to need for the next 10 years.
Okay. So you're just saying, yeah, that's a great point. Don't lock it all up if you feel that way. So you're just rolling with them. You're not saying, oh, you're fine, etc. Some of these annuities will allow withdrawals annually, right? So there's some level of, you can take up to a certain percentage out. So that's something you could use too.
I
You
flew
ever
through that. Let me reiterate that because I said it pretty quickly. Uh, Depending on the company and the product, a person has an element of liquidity, but it is limited to either 5% or 10% per
Right,
year. And it could start as early as year 1 or year 2.
right.
Those are penalty-free withdrawals that a
Penalty
person
free
can.
withdrawals. Yes. Right. Any more than that, you're going to hit that surrender charge. Right.
Yeah.
Okay.
And
So
how, do you want to hear the surrender charge, how that works?
yeah, please. Yeah. People need to understand it. Yeah.
How the surrender charge works is there's a schedule. So let's say and it differs depending on the company and product. So, and you folks, it would be so much simpler if every company and every product was designed the same, but it just doesn't work that way. So it's really important to communicate to the folks at the insurance company, particularly the sales desk. Those will be a great resource for you to get the intricacies of what it is that you're dealing with your particular client. But now let's talk about the surrender schedule. Let's say we have a 10-year annuity and the surrender schedule, it's going to be the heftiest in that first year because you're the furthest out, right? So it's your first year of 10. So let's say the surrender charge is 10%, then the next year it could be 9% on a descending scale, so that when we get closest to the end of that 10 years, you're down to like 4% or 1%, depending. So 10, 9, 8, 7, 6, or it could be 10, 10, 9, 8, and then they stop at 4, 4, 4, 4. But the idea is it's a descending scale. The further you get towards the end of your contract, the lower the surrender penalty.
So the other like objection I would have is like, you mean I can put money into this thing and I won't lose my money? That sounds like too good to be true. How does that work?
Well, you put your money in a bank in a savings account, you're not going to lose your money, but they're just not going to give you very much for it. So I'm offering you an alternative where you can put your money in an account where it's protected very similarly, but at an insurance company. And this
Yeah,
one
but
is.
insurance companies fail. I don't understand. Like they're not
Mm,
FDIC protected, are they?
mm, mm. That is such a great point that you brought up, and here's why. You know, we must be concerned about the security of our money, and this is one of the reasons why I do what I do. Banks fail. Banks are allowed to give out. I just recently came across a statistic. Banks are allowed to give out 90%. They can loan out 90%. They only have to retain 10%. Please fact check me on that. If anybody finds otherwise, please let me know. But that's a statistic that I recently came across. And insurance companies, on the flip side of that, have a far greater responsibility to maintain assets in-house. So banks are sure to fail. Insurance companies will stay solvent. And in the possibility that the insurance company, one or two or some of the smaller ones, become insolvent, a bigger one will come along and swoop them up and absorb them. And then the third step here, so the banks have failed. We've got these big insurance companies. Maybe they absorbed a couple small companies. But let's just say that a company that you had your money with became insolvent. There's something called a state guarantee. We are not allowed to sell with using this information, but I think it's valuable knowledge to understand. States have a guarantee to protect annuity funds per company. So on average across the country, it's about 250,000 per company. So let's just say I have $1 million and I want to be sure that I'm covered by the state guarantee. I'm going to apportion it out, whatever the word is, allocate it accordingly. 250 max per 4 different insurance companies, and my state guarantee will cover all of that money.
Right, right. Yeah, and life insurance companies, guys, have the same arrangement up to a certain face amount. That's why final expense. There's some carriers that have no ratings. We don't care because the state guarantee backs them up, and they will swoop in, and some carrier will come in and buy out their block. So
The state guarantee will vary. I do know that in some states where I have licenses, it goes up to 350 and even 500, I believe, in New York.
right.
The thing is that I just came across, I was looking at a state guarantee yesterday, and it said, and I like to look at the individual state guarantees when I'm working with people because I want to know if there's something, a finer point that varies. But I did read that should a person relocate, the state guarantee is not necessarily going to stay from the state that they wrote it in, but it may be for the state that they're in at the time when a company becomes insolvent. So there are different moving pieces and parts, but there are websites, and you can certainly Google search and be able to pull it up in 2 seconds about this state guarantee and be able to find the information about the amount and the stipulations.
So getting close to wrapping this up, Jess, we move out of the discovery phase. You've gotten permission from the client to run some numbers. I assume you come back on a second or a third call, right? And then if so, what are you doing, or what are you generally presenting to the client? And then how are you getting their commitment?
Oh gosh. Well, so I always schedule a meeting from a meeting. Okay. If you don't do that, number one, you're not leading. And number two, they may have all the best intentions in the world, but they're going to fall through the cracks, and they're in the abyss, the great abyss, and you'll never see them again. That's the
So in
reality.
other words, this is so important. I'm just going to elaborate on this. So at the end of the first call, your discovery, you're getting all the information, right? You are not saying, hey, I'll call you back with some details. Or, hey, you, even worse, why don't you call me? No, you're saying, I'm going to do some research. How about we meet together next week on Monday at 2 to go over what I found?
When's
Correct.
the next best time that you're available to meet? I've got time in the next day or two. I could do morning tomorrow. I could do afternoon the next day. When would be the next best time for us to meet? The momentum is key. If somebody is really interested to get on your calendar, number one, you have to have the availability in your calendar. When you're new, you need at bats, and you need to have lots of meetings. When you're seasoned or you have skills and competence, you must have an open calendar. And this is the difference between building my book of business and writing millions every few weeks right now, is open availability for the most pressing cases. And I've had to prioritize the people that are the highest intent, and everybody else has to be silenced. I literally have to just push the to-do list aside. I have to push the phone and the emails aside. But when I have a high intent case, I work that case until it's finished. And then I'm able to continue and pick up these other pieces and parts.
I think that's why financial advisors do this. I'm sure annuity people do too. At some point, you start having required minimums to be even work. Like, are you going to spend all this time for a $50,000 case when your average deal flow is $250,000? You know, so you only have so much capacity. So I think the logical progression, in my opinion, would be is to move up the chain of, you know, net worth of the clients and how much they can move as your time becomes cramped. But that's a first world problem we hope all of y'all have eventually. So you come back. What are you doing on this next presentation? Walk us through what you're presenting and what happens.
Okay, so in the discovery, just to recap, I uncovered their pain points. I understood what their problems are, what they're looking to solve. They may have an income gap that we have to solve for. They may be afraid of losing money in the stock market. They may have lost hundreds of thousands of dollars, and now they just don't know how they're going to be able to make ends meet. We've got to figure out how to solve for their problem. And when we leave that meeting, we have to let them know we heard them. We're going to do our due diligence to come up with a solution to that problem. And we're going to reconvene in a few days to go over some solutions that I'm going to put together for them. When I come to the next meeting, then I'm going to share with them why what I found will benefit them and help them to retire better. And it doesn't have to be fancy. I have a lot of subscriptions to a lot of different things. And I tell you, the best thing that I do is use my mouth. The subscriptions and the softwares and the fancy and the this and that, you lose people. It's not personal. They don't follow. It's over their heads. The thing that works best for me is I make the complex simple. I used software that was very expensive for many of my high net worth clients repeatedly, and it fell on deaf ears. And I even ticked off a couple of them that were family and multimillionaire ex NFL exec, and he was mad and wouldn't return my emails. And he was a repeat client of mine, and he and his brother were just like, I don't like what you just showed me. Well, they did come back and they understood the fundamental premise, what I was trying to come across, and they ended up writing 5 pieces of business as a result. But the software was a hindrance. And I would have been better to do my delivery, communicate the points, articulate with clarity, and then move the process forward.
Right. Okay.
And it took months of getting over his being upset. And then he created his own spreadsheet and came back and said, okay, this is what I believe you were trying to show me. I didn't like the presentation tool that you used, but I get the point.
So you're showing what exactly in presentations now, and then what happens at the conclusion of the presentation?
Okay, so one of the most fundamental and simplest things to do is to use illustrations that are provided by the insurance companies. Um, some people want to get fancy and create their own slideshows. Some people
What's
want
an
to create.
illustration? What's an illustration?
Okay, an illustration is a tool that's available through all of the insurance companies that I've worked with. It provides an overview of the product. It will define terminology. It will define the terms of the product specifications and contract. And it's going to show past numerical performance and potential growth, hypothetical growth, and then also income amounts that a person could receive in income for life. By using the illustrations, I believe that is one of the simplest ways and most compelling ways to move the needle with a prospect.
It shows what could happen essentially with this policy and what to expect.
Yeah.
Okay, so you showed this illustration to the client. You're showing them how all this will work and point to points and cap rates and all this terminology you will learn more as you get into annuities. What do you do at the end of that? What's the next step? You show them all this. They like what they see. What do you do?
I definitely get buy-in throughout the presentation, and I ask them questions, and I want them to ask me questions. The more engagement you have with the client as you're going through this, the more likely you are to be sure that this is the right fit for them. But if you just go through okay, you asked me what not to do. Do not be results driven. You've got to be progress oriented, because you need people to go along the process with you. If you're only seeking a certain outcome, you're really shortchanging yourself and your prospect, because you got to find out what's the right fit. And you may end up taking a redirect, and you may end up finding something else that's a better fit or better timing. But don't be afraid of what you're going to uncover by doing things the right way. So if we're only thinking about getting a sale, it's probably going to be ineffective at some point. I just don't, I can't recommend that enough. Going through, showing the illustration, getting their buy-in, but because they genuinely believe that this is the right fit for them. And if not, listen to what they're resisting about. What kind of feedback are they giving you that might help you to better understand what their pain points are?
So at the end of this, you're closing them.
They're closing themselves.
What do you say to get them committed at the end? I mean, I know, understand, like you're doing all of this really throughout the presentation, getting the buy-in, like, but if there is something, like, what do you say to bridge the final gap to get them on board?
Yeah. So an annuity is not something that can be bought. It's not something that can be funded. It's something that you actually have to get approved for. There's an application process, and then it has to go through a suitability review. There is a section, there's a financial section we're going to have to go through. Those are what I consider nosy questions. Probably a little uncomfortable for me to ask you, and maybe uncomfortable for you to have to consider, but we'll work through those together. And it's just really for the purpose of the insurance company understanding if this is the right vehicle for you. We can go ahead and get started with that suitability. We can go ahead and get started with the paperwork, so we can get that submitted for your suitability review. The funds will not transfer until you've been approved, so you still remain in control of your funds. Would you like to go ahead and get started with that today?
Cool. So some sort of takeaway, like not selling anything. You got to do all this stuff first, right? So it's a light close in a sense, but
I mean, that's a very direct approach to getting the application.
Yes.
Yeah.
Not pressure though. And it's just like, look, we don't even know if we can qualify for this, right? It's kind of a variant of that kind of close. Okay, cool. I like it. Very good. So good. Any last things you want to talk about on sales that are important, kind of like pro tips or last pieces of advice before we're going to wrap this up and take some questions from the audience, and then we'll be done for the day.
Okay. I mean, there's the e-application process. That's the next meeting. I also believe that it's important to be servicing the client after sale. And so there are a lot of touch points there that we can work on. And that's something that I like to work with agents and help them understand. But no, I think that was great.
Cool. Thank you. Okay. Transitioning now to the questions in the chat. Regarding the virtual approach, how do you begin to establish that trust that is so necessary?
It's just a conversation. If people talk to you and they like you, it's game on. If you come across as pushy, assertive, salesy, game over. People know pretty quickly if they want to talk to you for a couple minutes. And you can establish your credibility by putting in points like, this is just going to be about a 5-minute call, or you can make it a 15-minute call if you like. But whatever parameter you set, keep your eye on the clock. And as you approach that point, 10, 12 minutes in, we're nearing our 15-minute mark here. A couple minutes. I just wanted to touch in with you and find out how you're feeling about this. I'd like to go ahead and set a next day and time for us to connect. But make sure that they understand you're respecting their time. So you're building trust through the actions that you're taking and being true to your word. So set yourself up for success in that regard.
Yeah, not specifically talking to you, Jay, but there's this idea that rapport is very difficult to build, not in person. Typically, the people who say that have never sold at a high level on the phone or virtually. And all it is just a different set of skills that you need to develop. Think about it. Like, stock has been sold sight unseen. Think Boiler Room, right? Or Wolf of Wall Street for decades, probably for 100 years. And somehow you can build enough rapport to get somebody to trust you, And so the point is don't get lost in this idea that, and again, not accusing you of this doing, Jay, but any of you out there, like, it's impossible to bridge the gap. Like, there's been big money moved sight unseen for a long, long time. So the key is, how did they do it? And then adapting that to your strategy. Can people roll over funds, Jess, from a 401k IRA if they're still employed and paying in?
It depends on the plan administrator's rules. Yes, if they're the right age. So it could be 59 and a half, could be 60, could be 62, could be 65. But yes, it has to be in accordance, however, with the rules of the plan administrator. Otherwise, you're looking for former employers' old 401ks where you're no longer working.
How do you determine what the minimum liquidity needs to be in order to qualify for an annuity?
Tricky question. I always defer to asking the insurance company that you're seeking to work with, and they'll do a pre-suitability check for you, so you can actually fill out a form and go over all the financials. It's going to be case by case, but some basic checkpoints are: I always want to make sure that the person has at least 3 to 6 months bill money, and really 6 to 12 months would be ideal. The more they have liquid savings, it's better. And if they're 59 and a half or older, their retirement accounts are considered liquid. So that's very helpful. And their income needs to be greater than their expenses. If they're living below their means, that's great. If they're not, that's a problem. If they have huge debt, big red flag.
Using an annuity to satisfy the RMD for a traditional IRA distribution, is that possible?
Yeah.
Okay. So Robin says, so with this example, the 75,000-year-old inheritance example, not being old enough to qualify for an annuity yet, where would you advise him to put the money until he becomes the age of that age?
It doesn't have to do with age of qualifying for an annuity. I've got a 35-year-old who I helped her get an annuity. It had to do with him not having enough liquidity, Robin.
Yeah. Okay. So what could he do with the money otherwise? I mean, there's a lot of different options there, stick it in a bank, throw it in to a stock account, right? An IRA, 401k, lots of different options, depending on his risk tolerance. Okay. Any last calls for questions here? As we wrap this up and I wait, I'm going to just give everybody the next steps. If you like what you've heard, again, the purpose of this training is to introduce you to the world of annuities, how they work, how the money works, and then the sales and marketing process. But this is just the tip of the iceberg, okay? What I've discovered doing this for so many years is that in order to be successful selling annuities, you need a pro in your corner. I mean, even in the case studies with Jess, it's like side note, because Jess can't just say, like in a boilerplate sales presentation, exactly what's going to happen. Every single situation is unique, and it takes time to develop an understanding of it, as well as mentorship. People who've been there before you to help guide you through the process so you don't lose a deal. We used to see it all the time with the former trainer. People would bring in deals. They didn't understand what they were doing, and they would lose them. So here's our offer to you. If you're wondering, well, I like the idea of annuities, maybe I have an idea of who a lead or a prospect or book of business is, or maybe you have some questions about how to generate these. The next step, our offer, is to join our free training website. That's listed now in the chat. It's davidduford.com/ISS. You're going to open a free insurance sales success account, and that's where Jess holds once, basically every other week training on Mondays, different times, to talk about marketing and talk about sales. She takes questions from the audience. There are agents who attend that are writing business with Jess. It is really the perfect place to go to get more and more in depth into learning about how annuities works and how you can start thinking about converting your leads, your book of business, or your warm market into annuity sales. And what Jess does very well is that she holds you by the hand, walks you through the process so you can start to develop the knowledge necessary to do this successfully. So again, go to davidduford.com/ISS to sign up. Look for on the calendar when Jess will hold her trainings. And that is the next step. What continuing education credits must I take in general? Just any life or health ones, 24 hours is typical. Robin says, do you share a pick and or credentials with them to being of call the way we do for FE? I mean, you could, but most people are credentials and stuff. It's a crutch to do as a new agent, but people trust you based off of your demeanor and how you hold yourself. And that usually comes out if it's telesales and tonality. It comes out in person or virtually by eye contact, how you speak, how you answer the questions, right? So it's like when somebody says, you can trust me, can you? They had to say that. Like, you shouldn't have to say it to be trusted. Does that make sense? So it's more about your demeanor than it is about any specific words. Well, Jess, thank you so much for being here. Appreciate your time and knowledge and investment in this process. And again, the website, Deanne, is davidduford.com/ISS. We will see you next time. And again, thank you for attending our annual annuity sales and marketing training. Hope you guys got something good out of this.